Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Good morning, welcome to the daily Forex video research. Today the 28th of September, and today we will talk about the euro currency. Well, I have chosen the euro currency because our context for the cable is still intact. So if you would like to know a bit more about it, so you can read my weekly research on the ForexPeaceArmy.com and my thread on the forum. Well, Japanese yen is still anemic during the previous couple of days, so it's not very interesting to analyze right now. But euro currency has some interesting moments, right? Some special nuances on the lower time frame that I think worth it to discuss right here on the video research. Well, for better understanding, we will start from the weekly chart of EURUSD. So here is the weekly chart. There are a couple of moments that were important right now for our context. First of all, look at this A, B, C bottom pattern. Market has reached 618 expansion from this ABC move. 134.89 was touched during the previous week and touched again during current week. But also interesting, look at this area 134.46, 135.44. This is the weekly confidence resistance area. This level trade to resistance for the major high at 158.88 if my mind doesn't trick me, and this is 618 resistance from this high to this low. So combination of two different Fibonacci resistance area creates the confidence. Also, when the Fibonacci resistance coincides with the target expansion, Fibonacci expansion, this creates an agreement. So just above the market, the very strong area of resistance 134.46, 135.44. Please take in mind this effect. We will need it just on lower time frames. This is the daily chart of EURUSD. This is blue horizon lines, the weekly confidence resistance. Red line, the 618 expansion that we talked about on the weekly chart. The market has hit it. Okay, the blue line on the chart. This is the Jordan Apple-Estimated predictor. It shows us the level of overbought, and you can see how market just creeps with the overbought and still stays in the overbought area. Although it's a bit bounce from this line, but still the level of overbought is still high, and this has happened just in the area of confidence resistance and after the market has reached this target. Okay, this is the same weekly chart. Okay, this is the 4-hour chart of EURUSD. Well, we have some important moments right here. First of all, we can see this is the parallel channel of the move to the upside. Look at this A, B, C bottom pattern. Yesterday, market has hit 100% expansion from this ABC move at 135.01. Well, for those of you who has read my weekly research, you know that I choose for A point previously this low. But this is also the valuable low because the move has started particularly from this level. And why I chose this target? Because look at this market yesterday move just above these highs. It shows the wash and rinse, touch this area, touch this target and move back. So this is important. In this circle, wash and rinse of the previous highs. Also, you can see that inside this parallel channel, now market is forming the bearish wedge. And look at this. This is the bearish divergence on the 4-hour chart with the MACD indicator. Okay. Well, although I am not very reliant on the divergences, but this divergence just inside the weekly confidence resistance area when after the market has touched the weekly target and the daily overbought. Personally, I do not want to buy right here from the positional point of view. So if you're a positional trader and do not trade inside intraday, you should wait until the market has finished this retracement to the downside. but I do not see any problem for those who like intraday trading to establish short-term positions on the short side of the market. And here is possible two scenarios. Well, the first scenario is my preferable. I would like to see the bullish breakout failure of this wedge. Why failure? Because I suppose that the strong resistance above the market will lead to the failure breakout, and this breakout will move in game the breakout traders who will buy when the market will exceed these highs, and if exceed these highs. When this will be the failure signal and market returned back to the bearish wedge, stops that will be placed here and here will add fuel the move to the downside. Well, I just warn you that if this will happen, market will show the failure breakout to the upside. This could be just some kind of rejection of price, some railroad track, or some patterns right here, bearish engulfing pattern. After that, move to the downside will be really fast because it stops just below these lows, will add fuel to the move to the downside. Well, the second scenario is just a simple breakout to the downside. It's also very nice, but not so powerful as after the failure breakout. So the two possible scenarios. Well, probably we can enter on the short side right now, but it's a bit unsafe because we can get some unfavorable moves possible during the breakout failure or some choppy price action right here. So I prefer to see breakout to the downside and enter on the shallow retracement, maybe on 5-minute charts or 15-minute charts after the breakout to the downside. Personally, I would like to buy the first ABC retracement to the upside and enter on the short side of the market. The possible target of this move, I suppose, at minimum 132.50, because this is the previous highs. Hold on, I just show you on the weekly chart. Look at this, 34.50 previous highs right here, and the 50% retracement of this strong bar. So this is the minimum target. But if we take into account the daily overbought level, possibly market can show even deeper retracement to the downside. Okay, that's been said, this is my scenario for a couple of days, maybe today, maybe tomorrow. If we can see some kind of breakout of this wedge and this parallel channel, and I think that should happen in the nearest time, we can enter. If we can see some wash and rinse, breakout to the upside and fast return, then we can enter on the shallow retracement of this return on the lower time frames, on the 5-minute chart, 15-minute chart. Okay, if we see just breakout to the downside of this bearish wedge, we can enter and sell the first ABC, or just a single leg retracement to the upside on the lower time frames, maybe again 5-minute charts, 15-minute charts. Okay, this is my scenario. Be careful, this is a very thin price action that has a lot of nuances, and you should follow your trading plan and take the risk reasonable.